What's up, YouTube? This is Martin Day Trades, and you can follow me on Instagram at martin.daytrades. So today, guys, I have a good video. It's for the TradingView tips and tutorials, and I'm going to be talking about fair value gaps, also known as imbalances. So let's get right on into it. Let's see right here. A fair value gap is you have to look for 3 consecutive candles. I'm just gonna go to the 2 month, see if I see anything here, and then the 3 month. Okay, so I don't see anything here, but I can show you some past um fair value gaps, and I can guarantee you that this is gonna be the top of one right here. This week might be bearish still, but there might be a fair value gap within this range that will be created. So the next candle that comes down on a 3 month may create a gap for it to start to target some targets. But I can show you guys these gaps on this impulse right here. So it's the candle. So fair value gap, guys, let me just go ahead and do this. My brother's fiance made lunch today, bagel pizzas, which are amazing. I have yet to try it, but it smells really good. So a fair value gap, also known as imbalances, which I go back and forth when I talk, depends. It just really uh you hear me go back and forth with fair value gaps and imbalances. So what they are is they are areas on the charts where price created an imbalance, where price created 3 candles. Okay, guys, that didn't even make sense. So we're still on the charts where price created 3 candles, and it's the body portion of the middle candle. Let's go here and do something. Middle candle. It's the body portion of the middle candle. Um, and it's only the portion of the body that is between the highest part of the previous candle's wick. I think I spelled that wrong. Uh, Candle's wick and the lowest part of the last candle's wick from the 3. Okay, guys, so what I wanted to kind of do is make this smaller. I hope you guys can see that. I recently went into high definition 1080. Hopefully we'll see if this comes up, but if not, I'm just gonna make this a little bit bigger. So if any of you guys want to screenshot this right now, I'm gonna leave that down here. You guys should be able to see that. So with that being said, um, okay, you guys got that. Okay, whatever. I'm gonna make this smaller now. It's in my way. Okay, so there's imbalances here. So let's count this candle. One, two. Let's go down to a monthly actually. Weekly. So if you look here, there was this imbalance, and what it is, it's this move right here where it has the wick. So it'd be this part of the body, and you can see that price was rejecting this area right here. Probably on a smaller time frame. You know, it's the this imbalance here. After it broke these lows, it created an imbalance. So when price is coming back up, it was targeting these for shorts, or for if you're getting in, you're going high and low, just depends. Oh man, when I erased my charts, oh no, never mind, it's on the daily. So you guys can see that there is an imbalance there, and we can even go to a smaller time frame and do an imbalance on a smaller time frame. Let's see. I want to say this is an imbalance right here. There's that imbalance that was created. I think this is one right there, guys. So I'm picking this area right here, guys. No, it would have to be like right into, no. So I'm having a difficult time finding some fair value gaps. Hour. Oh yeah, a lot better. So what a fair value gap is like the candles that go down, it's the bodies between the candles. So this could have been a fair value gap right here, and you could have stretched it out and then had an area of interest for a move. There's this move that happened. This fair value gap here going long, about right there. So price was gonna have a reaction somewhere in there, which it did. Um, there's this one right here, guys. If you guys see this, it's from this candle to this candle. There's this one right here. There's this one right here. So that's what I mean. There's three candles, guys. One, two, three. And then it's the body of where this candle's wick and then this candle's wick. It's the middle portion of that. So you can set now, what are fair value gaps and imbalances good for? Now, guys, this is the thing. It's not really good for entries. Now, it can be used for entries. However, they aren't always used on the trade setups. Um, so with okay, so then so what are fair value gaps used good for? So fair value gaps, aka imbalances, are good for looking for targets. So when you're looking to enter a trade, there's three steps to entering a trade. Three steps to entering a trade. One, it's the entry price. Two, know the stop loss price. Three, um, three steps, and then knowing targets, knowing take profit levels. Okay, so there's a lot more to that, but when entering a trade, these are the main areas of interest, and then it's also knowing how much are you gonna risk, um, which means 50 pips, 100 pips, and then if you're looking to risk 1% for the day, then you gotta account for your account size, and then to calculate it to get your lot size for that one trade for 1% for the day. So that's that. But so fair value gaps, aka imbalances, are good for looking for targets. 3 steps to enter a good trade. Um, the entry price. Excuse me, guys. Know the stop loss price and knowing take profit levels. So let's see here. Getting for a long here, right? And there's this fair value gap that was created here. Now, guys, this isn't the time of day. I just want to show you guys where these things can gravitate towards. So let's say this move happened and we're getting in long here at the end of New York. See, as Asians trading up, this is also an hour-long chart, but we're gonna go in and do this. And this isn't even my time of day to trade. Risk 100 points and we're targeting the fair value gap. Let's say the 50% of that. This is a 1 to 4.5 setup, essentially almost 1 to 5 setup, because we're targeting this right here, this area right here. And there's other things to target too. Let's say we're using a Fibonacci retracement tool, and we can see that it lines up with the 79% Fibonacci level. So this could have been a trade. Riskier, yes. Yes, it is risky because one would be entering at the beginning of Asian session. But things move in waves, so it's better to just buy low and and sell high. So let's say we do target the 79% and it turns into a 1 to essentially 5 risk reward. So these fair value gaps are good for looking for those targets. So that's what I meant by that, guys. Um, let's go do another example. I think this is one right here. This right here to right here. See that I'm looking right here, guys. Right here, I'm looking at all these candles, and I see this move right here. It was an all-day move, but there's in between that there was a gap. It's it's from like right here. See how the highest candle has its lowest wick, so I'm going to go to the body of the next candle, and then only the body of the second candle, because the third candle comes up, and actually the wick goes right there, right? So what I'm gonna do is just click that and then just slide it this way. And you can see, guys, that this lines up perfectly into this. Now, if one was going short down here and they were going to swing trade it, they could have been looking for this fair value gap. And there's other fair value gaps too. There's in this, but this is a high probability fair value gap because then price came down here, New York opened, and one could have day traded or swung traded this one right here. Let's say 100-point stop right there. Um, and the way we trade, we probably get it 75. So down here, and we're targeting this fair value gap. This turns into a 1 to 16, almost 1 to 17 risk to reward, guys. And let's say we did leave that at 100 under these wicks right here. That's where we're targeting. So this is now a 1 to 12 to 2.25 risk to reward setup. Yeah, guys, these exist out in there, and we could have been targeting other areas to not have to hold for 1, 2, 3, 4, 5, 6 days essentially, guys. So even if someone was taking out bigger portion, let's just say like up here, that's still a 1 to 10, and then they traded it within this range. Sorry guys, I got a text. Okay, so my mentor is messaging me right now. He said you have to make it so that TradingView window resolution is the same as the OBS recording vessel. Since you're recording on a large monitor, it looks really squeezed. So I am recording it on a large monitor, but what I did was I lowered my Windows screen, and this is testing out a theory. I'm expanding it to the size of the OBS, and we'll see how that works. So guys, I'm gonna look for another example. Take a bite out of this though while it's still warm. Mmm. 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 That's good. Mmm. I have. Mmm. There's this one right here. And actually, guys, this fair value gap right here, it also lines up with this order block last up candle. And this order block was tapped into, but the fair value gap looks like it was even a better entry point to get in. So going short anywhere in this fair value gap, this was the trade during New York, going short. So let's say anywhere in this fair value gap at our time of day was 9:30. So like let's say right there we get in, 9:30. You guys see that's at the bottom, and say we're targeting to put a stop loss that's high of that fair value gap. That's a 100-point stop loss for a all day move. Um, that's a 1 to 4 risk to reward, guys. That's the numbers don't lie. That's you could have been risking 2% on this trade and made 8%. Mm-hmm. And it's all about patience, guys. So this is my video on fair value gaps. I'll probably make some more videos later on as my I'm learning how to get better video resolution. So I'll remake these videos for you guys in the future. Mm, different examples, maybe have some more insight on how to use them better. But those are what they are. All right, guys. This is Martin Day Trades. Like, comment, subscribe, and have a great day.